At the annual forum of people's deputies that opened today in China, very ambitious economic goals were presented. Among them is a 5% GDP growth, as well as a new development model for the housing sector. But no significant stimulus package has been announced to help support markets and reassure worried investors. US stock investors are also reluctant to open risky bets today. Market participants are waiting for the annual testimony of the Federal Reserve Chairman on a Wednesday and Thursday. After yesterday's timed new record around $5,145, today, the S&P 500 went sharply down and began to consolidate below 5,120 points. Jerome Powell is expected to remain cautious in his economic assessments and the outlook. He is likely to call for more patience regarding the timing of the first rate cut, and the hawkish statements of his colleagues in late February and early March have already prepared the markets for such prospects. Yesterday, Atlanta Fed President Rafael Bostic went even further in his hawkish forecasts. The policymaker believes that the first interest rate cut will take place in the third quarter, and then the Federal Reserve will need a pause to assess the impact of interest rates on the economy. The US dollar gave a strong response to the hawkish comments of Raphael Bostic. The US dollar index jumped to about 103.95, but still bullish zeal was not enough to break through the critical level of 104. The US dollar index entered the consolidation stage in a narrow range between 103.82 and 103.95. As the FEDWATCH tool showed today, the likelihood of a rate cut at the meeting on March 1920 is now considered by markets at 3%. At the next meeting on May 1, it's just over 18%, but the forecast for the summer already looks more serious. The market assumes a more than a 67% chance of a cut in the official funds rate at the policy meeting on June 12. As for the forecast for a rate cut in the EUROZONE, the odds are only 4% that the ECB will announce the first rate cut at the meeting on March 7, and the chance for a rate cut at the April meeting is only 17%. So, experts reckon the most likely date for the ECB's monetary easing is June 6. By the way, this is just before the expected first Fed rate cut in June 12th. If the ECB takes such a step before the Federal Reserve, the euro will remain in a weak position against the dollar much longer than is currently predicted. Interestingly, today's factory inflation data did not make any impact on the market sentiment. Reports showed that producer price inflation in the euro area slowed to minus 8.6%, and this figure turned out to be worse than the forecast of a minus 7.4%. Moreover, the previous data after the revision turned out to be even worse and was downgraded to minus 10.7% instead of the estimated minus 10.6%. The euro has been falling since yesterday as the traders have shifted focus to the United States. The highlight of the week is the US nonfarm payrolls that will be published on a Friday. The official report is prefaced with the ADP employment report due tomorrow. Employment forecasts were recently upgraded, so investors may also be expecting something similar in terms of vacancy rates. If the forecast comes true, the US dollar will go on the offensive against the euro and begin to win back its latest losses. However, most likely nothing fundamentally will change for the euro-dollar pair. The euro is likely to move within the same sideways range of 1.0800 to 1.0850 if an upward scenario develops. and the price settles above 1.0850 during the day, the bulls may try to push the price towards the landmark level of 1.0900. Brent crude also came under selling pressure from the firm US dollar today, and the Brent price again sank below 83 and then below $82 per barrel. As we can see, China's bet on the stimulating the economy and the boosting demand did not work. The market prefers to believe in auctions rather than slogans. China is the world's top buyers of crude oil. Indeed, oil prices confirmed this. In addition, OPEC countries are also unlikely to be able to push the price above $83 and $84 a barrel. Thus, countries outside the cartel will produce oil to compensate for the reduction in supplies. Therefore, in general, oil remains stagnant, and the oil market needs a serious catalyst for the significant moves. For example, tomorrow's data on the US labor market. If the ADP report shows weak employment, commodities will receive a boost. If oil prices extend their slide, the Brent price may drop to $81.50. But even such a decrease fits into the sideways channel. You have watched the market review by InstaForex analyst for Tuesday, March 5. Subscribe to InstaTraders TV channel and we keep you updated on the recent market developments. Don't miss our videos. Your feedback is appreciated. See you online tomorrow.